Well, I do think that technology right now is front and center for investors. And I think a lot of that reasoning relates to what you're talking about, Scott, which is kind of looking forward and saying to yourself, where am I going to get the sustainability in earnings growth in an environment ready for this, where you have or already seen or about to see peak acceleration in terms of the growth from reopening for the economy. Yes, I'm saying that. I never believed in the roaring 20s narrative. We're all going out to bars and restaurants and attending games, but we're going to see the reopening growth reach its peak here in the coming quarters. And if that's the case, I am going to go right back to mega cap technology. That's the place where I'm going to find sustained earnings growth over the long term in an environment where we think that rates are going to continue to be stable at best.
Okay. Liz Young, before I get to the others, I just give you a chance to respond.
Yeah, I think over the long term, you never bet against big cap tech, especially if you're looking at the prosperity of the American economy. Big cap tech is going to continue to be a big part of that. If we're going to look, though, over the second half of 2021, I think that earnings momentum in big cap tech has already happened. And there are other places in the market, particularly energy, industrials, materials, and small caps. Do not abandon small caps that are going to see a lot more earnings momentum than those big cap tech names through the second and third quarter.
So, John Najarian, I got, as I said, Microsoft hits a new record intraday high today, $2 trillion in market cap, albeit briefly. Alphabet, new intraday record high today. Facebook, new intraday record high today. You did have several of those names picked in our stock summit, whether it was Jim picking Apple or Sarat picking Facebook or Pete picking Microsoft or Saperstein picking Amazon. And over the last month, these stocks really seem to have some newfound momentum. Apple's up 7% over the last month. Microsoft 8.5%. Amazon, which had been consolidating, it's a Kramer pick, it's a Josh pick. So many like this stock. It's up 9% in the month. Google, Facebook, Netflix following suit. Does this trade back, and is it here to stay? Does it have this newfound momentum?
Yeah, it does, Scott. And some of those stocks were languishing. Amazon and Apple in particular had languished. But in terms of Apple, yeah, you've got the 5G, whether it's for wearables like that or whether it's for the new iPhones, the new iPads or Macs. This is going to continue to drive demand. And as far as Amazon, Scott, they're a company that had to basically find workers at the toughest time. The toughest time to get workers was a year ago when people were afraid to get out as much as they are now. Now, a lot of people, as we've discussed, are perhaps taking advantage of the excess capital that they've been given, and they'll stay at home. And that's tough for the other competitors against the likes of these digital monsters like Amazon. But Amazon's got the workers out there right now, Scott. Some of them are trying to unionize. I get that. But a lot of the other companies just can't get the workers back. So, yes, Amazon and Target and Walmart should continue to feel a lift. I know Target and Walmart, not necessarily big tech, Scott, but certainly Amazon has the workers that it can meet the demand because they already had the supply of workers. The rest of them are scrambling to get there. But big tech, yeah, I'd continue to hold it. As you know, I'm overweight in that sector, and I'm pretty happy about it.